Well, it has certainly been an interesting day today as the European Central Bank decides to introduce quantitative easing. Well, joining me to discuss this and more data is President of Ducra Asset Management, Roberto Falzoni. Welcome to Ducascopy, Roberto.
Thank you, Zinad. Happy to be here today with you.
So, of course, a very important day for the ECB as they introduce quantitative easing. But do you think this is the right move, or is it simply going to push the Eurozone into deeper difficulties?
I think that Mr. Draghi has been very courageous. I think that the move of ECB to introduce quantitative easing was not an easy one. There was big resistance from Germans and some other countries, and Mr. Draghi, pushed through his idea. He's maybe coming a little bit too late, or in a way that will probably not help so much European economies. As he was saying, central bank has been doing almost everything it could to help the European economy and growth, but government must take the lead right now and take the appropriate reforms so that this program of quantitative easing and all what the central bank, European Central Bank, has been doing in the last 2 years will give the appropriate results. What I think is that this move may be confirm and reinforce what they've been doing up to now, but for European economies, definitely what has been much more or is much more important right now is to have a weaker euro. So euro has been depreciating in the last year for almost 20% against the dollar and against Swiss franc and against other currencies. So this should help European growth, especially Southern economies, which are very dependent on exports, so this will make for them easier. Second thing that is helping very much European growth right now is oil. Price of oil dropped 50% in the last 6 months, and we know that in Europe we don't have oil, maybe except for the UK, and this will reduce the cost, will give a little bit more money in the pocket of consumer. So we have two very strong points right now to make it happen. But of course, without the appropriate reform, Europe is still in trouble because the level of debt is definitely too high, and so they need to cope with this problem of debt without mentioning the Greek elections and the Greek negotiation that will come after the election. So we must really take it from there. But I think Mr. Draghi has done what he could.
So let's move away from that story and to another big story out at the minute, which is, of course, as you've mentioned, the Swiss franc. So the Swiss franc move has unnerved investors and sort of shaken up the markets a lot. So has the SNB lost credibility?
Let's put it this way, more than shaken investors, of course, it was a big day. Last week when the Swiss National Bank decided to lift somehow the cap that they had on the euro-Swiss franc rate at 120. And this came, by the market unexpectedly, especially after some declaration just a few days before from Swiss National Bank president that this was a strong commitment by the Swiss National Bank. On my side, this was inevitable. The problem was when it was going to be lifted, because the Swiss National Bank was accumulating too much reserves, and this was becoming, a problem that would have been pushed further and would have grown much bigger. So all of a sudden, I think that it was more appropriate to take that decision. Now, of course, this could have been managed better, because the way it was done and it was not appropriate. This is what created this big dislocation in the market and created not only big losses for some of the banks or the people that were active in Swiss francs, but of course for the industry and for Switzerland as a whole, this sudden readjustment of 20% will be painful. And but this, is kind of showing also, a little bit when central banks are manipulating markets and are creating artificial level of prices, in this case the euro Swiss francs, but we could say the same for government bonds, you know, that central banks are buying at whatever prices, then the exit strategy normally is very painful. So I would expect this to be, unfortunately, just as another accident, and other will come. You know, whenever we will see, whenever the Fed will have to get out of their quantitative easing, and maybe things will maybe also not as low as everybody is forecasting right now, what will be the impact on the market. So I really think that we will have a very interesting year, very volatile year. You know, when we talk about volatility and risk, I also expect good return for people who will be able to act properly in the market. But we should be aware that risks are there and that we cannot believe in central banks. We cannot believe in government, because all of a sudden they will change the rules as soon as this is not anymore in their interest. So this is a clear message to everybody that we should really understand the situation and not just believe by the word of what people are saying, even if they are at this level.
Okay, so keeping all that in mind, and you touched on it very briefly, what are your expectations for the currency market in 2015?
Okay, you know, this is a very difficult question, Sinead. I think that nobody has a crystal ball. But we have been, I've been in currency market for more than 25 years. So we have seen a lot of movement, a lot of intervention, a lot of actions. And we tend that, you know, to take into consideration different factors, from fundamental factors to technical analysis whenever we have to approach the currency market. If we take, for example, the three big currencies like dollar, yen, and euro. Of course, right now, if you take it on a fundamental basis, everything is pointing to a stronger dollar, and we have a very strong uptrend in dollar against the other currencies. But as sometimes is markets, you know, when an expectation are too high, or today, let's say, the long dollar trade is very crowded, you know, you cannot find anybody who is negative on the dollar. We are breaking the lows of the euro today below 114.70, and so more people are getting into this trade. So my expectation is that we will have reversals, some kind of short-term reversal that could be quite sharp, quite sudden, just because, you know, market got ahead of themselves. And so we could have this reversal soon in euro dollar, maybe pushing back to, you know, we could go maybe to 113 and some extreme today, tomorrow, maybe Monday, but then we could easily have a snap back to 120, 122 in euro dollar short term. On a longer term basis, of course, I would still favor the dollar against the euro, but I think we should have kind of short-term approach and to see how the situation is evolving. We know that these things can reverse quite quickly. So let's say this is the main things concerning emerging market currencies, which we had, to be honest, a fairly good call on the last interview, where we're forecasting, especially Latin American currencies, to come under big pressure, and they lost more than 10% against the dollar. I would maybe take one of the most or one of the worst currencies in 2014, which was the ruble, and thinking that there we could have kind of appreciation of the ruble, at least short term, but this could have, you know, 10-15% comeback against the dollar or against some other currencies because of interest rates. So of course, now you have in Europe, and you have in Switzerland, you have in Japan, zero or negative interest rates. In Switzerland, I heard that some banks are starting to charge their clients negative interest rates on all their cash accounts. So of course this should favor or currencies with the higher yield or gold, and so I mean this could be an interesting trade. And I think that you will have probably by the end of the month of January. Normally the first 2 weeks of January you have kind of markets going up or down, but moving along what was the previous trend, and then the last 2 weeks of the month normally we will see the trends for the next 3 to 4 months. So I will be very careful what's happening the next week, and probably on that, if we have some kind of correction in the dollar, then you could have some kind of comeback of the currency that has been hit the most during the second part of 2014. But overall, I think that it will be a very good year for currency traders, for people who will be acting in the currency market. There will be a lot of opportunity. As much as I think that for industries and other people that have to be in the market, they will have to focus really and to do the appropriate hedging of their exposure, not to suffer from big moves that could make them, their all the effort on industry size to have a loss because of currency move.
And so certainly a lot to keep an eye on for the rest of the year.
Absolutely. So follow Duca's copy, follow ourselves, and I think you'll have a good understanding of what's going on.
Roberto, it's been a pleasure to speak with you. Thanks for joining us.
Thank you to be here again, and looking forward for the next one.
That's all from us here in the Ducascopy studio in Geneva. Thanks for tuning in, and make sure to keep clicking back. Bye for now.